every asset in the world is currently in a bubble. So we are in an every asset bubble, everywhere bubble. So you can choose to say, since every asset in the world, whether it's Bitcoin or real estate or stocks or land, is in a bubble, I'm not going to make an investment. That is one way of looking at it, and I'll give you my feedback on that. The other way of looking at it is, if everything's in a bubble, nothing is in the bubble, because if you normally, bubbles burst when one asset becomes worth a lot more than the rest of the market. So relative to the rest of the market, it becomes extraordinarily expensive, and the bubble bursts. Today, that isn't happening. And it's interesting because we've never seen this before in modern history, that all assets are going up. So for people who think real estate is worth 40% more than the beginning of last year, and they're like, this doesn't make sense, I have just one data point, and I probably have 50, but I'm going to give you the one that is the easiest to absorb. In January of last year, before COVID started, a month before COVID, Bitcoin was $7,000. Today, it's $49,000. So the question is, if Bitcoin goes up, and it's a speculative asset, correct? So if it goes up 7x, if investors think that COVID changed things so much that an asset that was worth 7,000 is today worth 49, by the way, it went up to the 60,000, so it's actually come down in price, then why would our asset class, which has gone up about 40% and has seen a massive increase in rents, like an unprecedented, never seen before, I've been in this for a long time, never seen the kind of rent increases that we've seen, March, April, May, June, and July, all 5 months were all-time record-breaking months in terms of rent increases. So we are actually seeing increases in rents, which obviously increases our profit, and we've probably seen a 40% increase in price. So from that perspective, real estate does not look expensive, or everything looks expensive. So on the everywhere bubble, all I can say is this: when every federal bank in the world is actively engaged in making the bubble bigger, it's harder for it to burst. Will it burst? Yes, it's inevitable. Will it burst quickly? I would suggest that you look at Japan. Japan started building an asset bubble in the 1980s. Hasn't burst yet, even though they've printed way more money as relative to their GDP that we have. So has China. So these bubbles are actually, they take a lot harder, they're a lot harder to burst than most people give them credit for, because the federal banks, who are in control of everything, every time they see that the bubble is at risk of bursting, they take steps to prevent it from bursting. So these things take a while, to go. I also want to give you one more data point. If you were sitting in 2009 and 2010 thinking this is a bad time to real estate, keep in mind we printed $2 trillion back then, $2 trillion, and we ignited a bubble that hasn't burst yet, but for 9 years until COVID started, that bubble basically increased real estate prices in a linear line, decreased cap rates in a linear line. There really weren't fluctuations at all. That was $2 trillion. We've just put in $6 trillion. So there's logical arguments that this bigger bubble, or everything bubble, has plenty of room to grow for the next 6 or 7 years. That is my hypothesis for my personal investing and for my professional investing. If you don't believe in that, if you don't think that $7 trillion will actually blow a bigger bubble, get out of the market because it's too expensive.